Hey everyone, and welcome. This week, we are breaking down a market that felt like it was getting pulled in a million different directions. I mean, it was a classic tug-of-war, with these massive forces yanking sentiment back and forth, leaving pretty much everyone with a serious case of financial whiplash.
So it really makes you wonder, right? What on earth causes that kind of wild, almost bipolar price action? How can the market be euphoric one day and terrified the next? Well, let's get into it, because the answer lies in four totally distinct, competing stories that were all battling for control of the narrative this week.
And here they are, the big four. First, you had the dizzying on-again, off-again drama of US-China trade. Then there's the huge debate over AI. Third, the market's almost blind faith in the Federal Reserve to swoop in and save the day. And finally, a new and pretty unsettling fear, these cracks starting to show up in the regional banking system. Now, the reason this is all happening now is that it's kind of a perfect storm. You've got geopolitics, a tech hype cycle, and the delayed punch of all those Fed rate hikes all hitting at once. Any one of these could steer the market, but altogether, it was just chaos.
Okay, so let's kick things off with the story you just couldn't escape, the US-China trade saga. And look, this wasn't some slow-moving negotiation. No, this was a day-by-day, headline-by-headline reversal that sent shockwaves through the market every single time.
The thing to really get here is the sheer speed of these flip-flops. On Monday, October 13th, you get some softer language from President Trump, and boom, the market breathes a sigh of relief. By Tuesday, the mood completely flips. We're back to threats of 100% tariffs. Then, a potential meeting gets floated on the 18th, and things calm down, only for the tariff threats to pop right back up a day later. This constant back and forth made it absolutely impossible for the market to find any kind of stable ground.
And you can see the impact in black and white right here. That positive signal on October 13th, it sent NASDAQ futures flying up 2.1%. The very next day, that tariff threat knocked them right back down 1.2%. The big takeaway here is that trading algorithms and humans alike were reacting instantly to every single word, creating these massive knee-jerk swings.
All right, let's shift gears to our second force, a debate that's been simmering for a while but really just exploded this week, the great AI question. You know, after a solid year of just incredible hype, investors are starting to ask the hard questions. Is this a real sustainable tech boom driven by actual profits, or is it a speculative bubble just waiting to pop?
And this really lays out the two warring camps perfectly. On one side, the bulls are pointing to incredible earnings from chipmakers like TSMC as proof that, hey, the demand is real, the profits are real. But on the other side, you've got these huge institutions like the IMF and the Bank of England waving red flags, saying valuations are way too stretched and that it's all starting to look a little bit like the dot-com era. And what's so fascinating is that even when the broader market was getting hammered, AI stocks were incredibly resilient, which of course just gave more ammunition to both sides of the argument.
Now for our third conflict, and this one is a classic Wall Street showdown. On one hand, you have this really comforting story. The Federal Reserve is standing by, ready to cut interest rates and pump up the market. But on the other hand, you have a pretty scary story emerging about financial stress, exactly the kind of thing that starts to bubble up after a year of aggressive rate hikes.
This number right here, it says everything. The market was pricing in a 96% chance of a Fed rate cut in October. For investors, this belief was like a massive safety net. The thinking was, it doesn't matter how bad things get, because we know the Fed will step in with cheaper money to prop everything up. It was a huge source of confidence.
But while everyone's eyes were glued on the Fed, waiting for that rescue, a totally different problem was brewing, just beneath the surface, and it was threatening to undermine that very confidence.
And here's what started to make people nervous. An index that tracks U.S. regional banks had its worst day in months. Then Zions Bancorp spooked everybody by setting aside an extra $50 million to cover bad loans. On top of that, old whispers about loan fraud at Zions and Western Alliance started getting louder. And this was the real fear, that this wasn't just a contained issue, but that it could spread, a credit contagion that could put the entire global market on edge.
And you know who summed up the dilemma perfectly? The man himself, Fed Chair Jerome Powell. He literally described the economy as being caught in this exact tug-of-war. The Fed was trying to balance the good news of strong growth against the risk that all those trade tariffs we talked about would fire up inflation. I mean, this quote just perfectly captures the tightrope that they and the whole market were walking.
So, let's put all the pieces together. You've got trade wars, an AI boom, hopes for the Fed, and fears about the banks, all pulling the market in opposite directions at the exact same time. So what does that actually look like in practice? This chart basically tells the entire story of the week. On one hand, you have the Nasdaq, a classic risk-on asset, just getting whipped all over the place by tech optimism and trade news. But on the other hand, you have gold, the ultimate risk-off safe haven, spiking to a new record high. This split is everything. It shows that while one part of the market was chasing the AI dream, another huge chunk of money was running for cover, absolutely terrified of the other stories in play.
So, what are the big takeaways from all this? First, because of a government shutdown, we weren't getting the usual economic data, and in that vacuum, these big emotional stories took over and drove all the volatility. Second, the market just couldn't make up its mind which story to believe. Third, that surge into safe havens like gold, that's a massive signal of deep, real anxiety. And finally, news about specific sectors, like AI and those regional banks, was having a huge, outsized impact on the entire market.
And that, of course, leaves us with the million-dollar question going forward. In a market getting yanked around by trade policy, tech bubbles, Fed promises, and banking fears, which one of these powerful narratives is finally going to win the tug of war and set the market's true direction?